Good afternoon. This is Tom Alexander. It is Saturday, April 30th. It's about 4 p.m. Eastern time in beautiful Charleston, South Carolina. A lot to discuss this week. We are rapidly approaching, or we're at a critical level in the stock indices. We're at a critical juncture from a market structure perspective. We are at a critical juncture from a technical perspective. And the four primary U.S. trading indices, the entire U.S. stock market is likely to move extremely sharply, maybe both up and down over the next week. The current narrative, we have the FOMC meeting on Wednesday afternoon, and no doubt that's going to lead to potentially some extraordinary volatility, and it may lead to volatility up into and through that announcement. So have a lot to cover in this report. Let's get started. By the way, quick housekeeping. If you find value in this, please subscribe. Liking it would be helpful. And if you would like to get notifications when I post new videos, hit the notification button. Okay. All right. On my screen, you can see the four primary U.S. trading indices, the cash contract, the cash markets. And you can also see the levels that I have highlighted. These are absolutely critical levels. The Russell and the NDX can be said to be in the abyss, the very beginning of an elevator shaft that, it's hard to identify where these indices could stop if we continue lower. The S&P and the Dow for the moment are diverging against the lower lows that the Russell and the NDX have made. This is potentially a very bullish thing, but it's very tenuous because we are right on these particular levels. Now, a more granular view is here. These are daily charts of the cash indices, and you can see clearer here than on the weekly chart the obvious divergences that we have in place for the SPX, the Dow, holding that February low, whereas the NDX and the Russell continue to make lower lows. And we had an extremely negative close on Friday. How much of that is related to option gamma dealer hedging? We don't know. We'll find out pretty quickly, I think, Sunday evening and early Monday morning if this is real or not. Now, if the indices, for any reason, were to rally and close above the highs I have highlighted on this chart, that would be probably extremely bullish, and it would be a pretty strong signal that an important low could be in place. Okay, let's take a look at a few other things here. And we'll take a look at the profile view. Now, the profile view, this is sort of important. I'm going to spend a little time with this. Okay, market profile. Market profile has increasingly develops a cult around it, like all forms of analysis, and the simple elegance of when it is an actual useful tool gets lost in that, because there's all this language and semantics and nomenclature special to market profile. Well, the market profile graph is a tool that is best used to help identify market condition. If you can identify market condition, that's where you start to develop a trade idea. And basically what we have here, these are the past 4 months. Now, April is incomplete, but you can see the past 4 months of trading. And really since the middle of January, the market is in one auction, as I have highlighted in the report. Now, the April profile, the April auction, is the proverbial double distribution. And again, I don't like to use market profile secret special language, but basically a double distribution is two auctions. You have an auction up here and you have an auction here. And this is the dividing line between those two auctions, basically. But we can simplify what's going on and make it more binary than that by splitting out the individual days. Each one of these letters is one individual day. So instead of a letter, instead of a bar, you have a letter. So if we look at this, the key to the intermediate term really is pretty well defined. Above here, it's bullish, a close below here, and it's bearish. From a structural perspective, that's it. Okay, let's take a look at the technicals. All right, this is the breadth work that I display each week, and it's pretty simple stuff. It's NYSE advancing minus declining issues, that's breadth. And then I have a 5-day moving average of NYSE advancing issues. This is a 10-day moving average of advancing issues. This, of course, is the SPX. Now, you can notice the green arrows highlight days on which breadth closed negative 2,000. Those are relatively extreme readings, and in bull trends, there are almost always markers of a momentum low followed by potentially a price low and then a big rally. Well, when you have clusters of these without the market able to rally, it's a bear market signature or a bear leg signature. But here's the big but. Even in bear markets, when you get clusters of these readings, the market will get so compressed that some sort of face ripping 10, 15, 20% rally is inevitable. The issue now is that because of the position the indices are in, we could be down another 8 or 10%, and then you get a 10% rally. So you don't know, but you don't have to know to take advantage of this. The bottom line, again, to reiterate, if we close above the high of the 28th or the equivalent high in the other three indices, it's bullish. We have to be alert and respectful of lower lows, especially coming into the FOMC meeting. And this whole thing will likely be resolved no sooner, really, than Thursday. You know, we have the FOMC on Wednesday afternoon, and the market will go ape shit Wednesday afternoon. And then on Thursday, we'll get a feel for what's real and what isn't. But in the meantime, what I'm expecting is real volatility. I don't want to make any assumptions. I don't want to get caught up in a narrative about what the market should do or what I think it's going to do. Let's just trade the market. So if it's below this level, you have to be leery of pressing alongside the market. You do not want to play catch the falling catch the falling knife if this market business begins to decline early next week, because we're in a negative gamma situation from an option perspective, and that's when selling feeds on selling. But even if we wash this thing out to the downside, I think we're going to see an important low by Thursday. So it's going to be a really, really exciting, fun week in the market. Hope you found value in this. Enjoy the rest of your weekend.